This is Horizon's Middle East and Africa. Our top stories this morning. Strikes intensify. The U.S. launches fresh attacks on Iran as tensions mount in the Strait of Hormuz. Trump vows to continue until Tehran stops targeting commercial shipping. Chip rout, Asian equities slide as semiconductor stocks extend their sell-off. Attention now turns to TSMC earnings for the next AI demand signal. And we hear from Dubai property tycoon Mohamed Alabbar on his $20 billion plan to help rebuild Syria. It's just gone past 8 a.m. across the Emirates, 6 a.m. here in South Africa. I'm Jennifer Zabasaja in Johannesburg. And before we get to some of those stories, quite a bit that we are following, let's just get you a check on where your markets are trading right now. If you take a look at U.S. equity futures, they're marginally higher on the day after what we saw was largely a positive session on Wall Street for Wednesday. We have been speaking, though, quite a bit as we parse through company statements and earnings over the past few days, but still quite a bit to go. If we take a look at where the S&P closed in the green for a second straight day on Wednesday, and so still quite a lot to watch out for, but still chip stocks under pressure in Asia. We'll get to Winnie Xu in just a bit for more insight into where we are seeing some of the price action in Asia. But still with equities right now, MSCI Asia Pacific Index down just over 1%, as you can see there on the board. But still, quite a lot of the story within the global equity market, and especially in the U.S., had been overshadowed by continual earnings, as I mentioned, and of course another softer than expected inflation print in the U.S. That was, of course, U.S. PPI that we got on Wednesday, and potentially how investors see that feeding through into the Fed's inflation gauge, preferred inflation gauge, of course, that is PCE coming later this week. We are now seeing traders dialing back on bets for Federal Reserve rate hikes later this year. As you can see, the U.S. 10-year yield marginally up right now to trade at about 4.5514. And just finally, we do have Brent crude on the board there. It's been wavering over the past few hours in this session. As you can see right now, down just about 0.2% to trade below $85 a barrel. But still, of course, geopolitical tensions in the Middle East a factor. And perhaps we are seeing some of the demand story playing into the price action there. But let's check in on how markets in Asia are faring. Winnie Xu is in Hong Kong for us with more. Winnie, quite a bit of red on the board there. Walk us through it.
Yeah, morning, Jen. As you mentioned, we're seeing Korean stocks leading declines in Asia today, with the KOSPI here down more than 6% earlier, even triggering a sidecar. Now, leading the declines here, we have, of course, SK Hynix and Samsung Electronics. So these chip makers coming lower after U.S. peers also falling yesterday. Now, SK Hynix's ADR listing, ADRs yesterday also fell by about 9%. So we are seeing those weakness coming through. When it comes to the central bank, Bank of Korea raising rates for the first time in more than 3 years, and even indicating further hikes down the road to tame inflation that has been driven by the AI trade. Now we are seeing that supporting the South Korean won slightly by 0.1%. However, weighing on the sentiment is also this expectation for South Korea to announce measures on these leveraged ETFs that have been really fueling the volatility in the stock market. As you flip the board, we take a look at where that volatility really is. 30-day volatility on the KOSPI is in fact at historical high. So you can see that's been really led by the leveraged ETFs. So what we've been hearing is that these measures potentially include increasing the minimum deposit for investing in these products, as well as expanding the rebalancing period throughout the session versus how right now it is just at the end of the day. Back to you.
Winnie Xu in Hong Kong for us. Winnie, thanks. We'll check back in with you in just a bit. But back to our top story. Brent crude hovering now around $85 a barrel after the U.S. carried out another round of attacks on Iran in a bid to secure shipping through the Strait of Hormuz. President Trump has pledged to intensify bombardment and claims Tehran is seeking more talks after the U.S. strikes degraded its missile and drone capabilities.
They want to settle so badly. They don't like what we're doing. and they do want to settle. We'll find out whether or not we settle with them or we just finish it off.
For more, we're now joined by Stuart Livingston-Wallace, our executive editor for the Middle East, North Africa, and Russia. Stuart, thanks for joining us. What exactly do we know about these latest strikes, except outside of the headlines, and really how are they fitting into the overall conflict at this juncture?
Yeah, good morning, Jennifer. So, I mean, from what we've seen so far, it's fitting the playbook that we've seen over the last week or so, and arguably before that. Clearly, both sides are trying to send a signal here, and they're trying, I think, very hard not to escalate. Now, I know that sounds slightly odd in the context of, certainly several dozens of attacks on a daily basis from either side. But if you look at what the US is targeting, it chiefly seems to be military installations along the coastal areas, therefore very specifically around protecting Hormuz, or at least degrading Iran's ability to threaten shipping. And then from the Iranian side, it seems very squarely aimed at US military assets around the Gulf, but specifically Kuwait, Bahrain, Jordan, so on and so forth, slightly further afield, obviously. I think the thing to keep an eye on here is when that target list expands to things like major cities, infrastructure, that sort of thing. That's when I think we read into it that there is a major escalation going on, and obviously that raises the stakes altogether.
Which sort of poses the question then, Stuart, what are the risks if we are continuing to see a number of these diverging headlines and the rhetoric coming from both sides, really?
No, I mean, I think that's an extremely good question, and I would sort of treat it this way. It is very easy in an environment where lots of missiles and drones are flying over at a rapid pace over vast swathes of the region, that one of those goes astray and does some horrific damage to something that was unintended, and that then forces the other side to in turn escalate to respond in kind, and that can get out of control very, very quickly. And evidence for that, you don't have to go back much further than March and April, where we saw widespread attacks on civilian infrastructure. That includes ports, airports, energy facilities, that kind of thing. That's a situation we could get back to unless both sides are very careful and try and find ways of de-escalating the situation. But as I say, when there's this much hardware flying around, it's very hard to contain that and to ensure that we keep a lid on things. So I think that is probably the biggest concern here.
Yeah, we'll continue to monitor the situation, as we know you will as well. Stuart Livingston-Wallace, our executive editor for the Middle East, North Africa, and Russia. Thanks so much, Stuart. Now, International Energy Agency Executive Director Fatih Birol warns the global economy will face difficulties if the conflict that's choked the Strait of Hormuz isn't resolved soon. Speaking to Bloomberg at the Aspen Security Forum in Colorado, Birol discussed the uncertainty markets are now grappling with.
The markets are nervous whether or not there will be a soon and lasting solution to the problem, and at the same time many countries are taking some measures to avoid the worst case scenario.
Talk about those measures. What are they doing exactly? We've seen them drawing from supplies, obviously, on an emergency basis over the course of this.
There is a few things. First, we see that some countries using their inventories, their stocks, such as China and some other countries, number one. Number two, we see that the production, oil production increases significantly from United States, from Brazil, or from Kazakhstan and elsewhere. Number three, it is noteworthy that the Saudi Arabia is making heroic efforts, as well as the United Arab Emirates, to through bypassing the Strait of Hormuz to bring the other cost of the region. All of them are good, but none of them are endless. So therefore, I hope the crisis will be solved quickly and in a convincing way. Otherwise, global economy may well hit some difficulties.
I hear you use the word hope, and I wonder how optimistic you are, indeed how worried you are about where we are now over the last 24 hours.
I am always worried. In fact, I have always thought, at the IEA, we always thought, what could happen if one day the Strait of Hormuz is closed.
You've thought through this many times.
Many times. We made some exercises and so on. And it is the reason, one of the reasons that we released a huge amount of stocks to the markets in a seamless way, which brought the oil prices $20 down. And now the problem is, once it is closed, many people think it may be closed again. So countries are now thinking not only what kind of measures they can take today, but how are they going to develop their energy strategies for tomorrow.
My understanding is the IEA has about 25% left of those reserves to release. Is there, what's the latest thinking on when you might have to deploy those again if this were to drag on?
So when we release our stocks, first of all, it was a historic 400 million barrels, which is equivalent to today, every day, almost 2.5 million barrels flowing to the markets, comforting the markets. And this was a historic, because never, ever we released so much stocks. And it was a unanimous decision, all of our member governments. And this was only 20% of the stocks we have. Still, I have the 80% in the pocket. If and when needed, our member countries, I am sure, will be happy to release those stocks. But I very much hope, again hope, that we will not come to that point.
That was International Energy Agency Executive Director Fatih Birol speaking with Bloomberg's David Gura. Now, still ahead, we'll discuss the continuing market fallout from the conflict in Iran and the AI trade with Angela live from St. James's Place. This is Bloomberg. Semiconductor stocks tumbled across Asia, dragging regional equities lower. The KOSPI is in focus as SK Hynix and Samsung drive losses ahead of Friday's holiday in Seoul. Joining us is CIO for Asia and the Middle East at St. James's Place. That is Angelina Lai. Angelina, thanks so much for being with us. So we've talked for months, of course, and we're seeing some of the price action reflecting the concern and some of the questions around AI valuations. Where do you stand on whether or not we have seen this momentum go too far too quick? Are we at that point right now?
Now, we have certainly been observing over the last 12 to 18 months a significant dispersion, primarily led by the momentum trade. Momentum on the one-year basis to the end of May have achieved around 38% return, whilst the other factors such as value and quality have significantly trailed behind. And what we have seen particularly of that is driven by the concentrated leadership of a lot of these AI or chips trade. So what we're concerned about is not necessarily whether the momentum will necessarily run out, but really rather the concentrated impact from these few names that are leading the trade on the momentum trades.
Is your expectation then that we'll see a bit of a broadening out in the near term?
Now, that's a really interesting question. Again, we are certainly not in the space of predicting the future. Otherwise, that will be certainly a very profitable business. However, we are observing certain signals in the market. We're certainly seeing extremes in the style dispersion that I have just quoted. We're seeing extremely concentrated, narrow leadership within the equities market. There's also a really interesting signal that we have been observing quite recently, which is that investors are demanding higher real returns. And what we're seeing is particularly the 30-year US TIPS real yield is approaching 3%, which is some of the highest levels we have seen since the TIPS have been brought to the market, and even sort of the 10-year trades are at levels we haven't seen sort of for the last 5 years. And what this signals is that traditionally, growth stocks in particular, where the valuation matters significantly, interest rate can impact the valuations of the growth stocks going forward. That may have a forward impact onto how we see or how the market investors sees these narrow leaders, which have a lot of that growth stylistics. And therefore, that could signal a broadening of market, or that could signal that actually investors are simply saying that maybe I'm not getting enough returns for the volatilities that I'm observing in the equity market, and I'm quite happily being compensated within the fixed income space.
Angelina, did your outlook and your investment outlook shift perhaps after that softer than expected PPI on Wednesday? And of course, we have been hearing from Fed Chair Warsh. How much has it shifted given the past few prints on inflation in the U.S.?
In terms of we look at a lot of what we advise our investors, our clients, is really separating the short-term headlines to the long-term structural drivers. While there's a lot of attention onto what the Fed says, the Fed, and particularly under the leadership of Warsh, have very much been saying that they are not, or they are going to be stopping giving much of forward guidance, and really, therefore, the market goes into a bit of a prediction spin as to whether the next interest rate path will be. Fundamentally, that is very much in line with how we look at portfolio construction anyway. We're in the business of building resilient long-term portfolios, and therefore the shorter-term path of the interest rate doesn't necessarily really impact how we look at the portfolio construction. What we really are looking at is what does this mean from a longer-term perspective. Now, inflation risk is one that we have been calling for some time and certainly monitoring our portfolios, particularly with our clients. We help our clients in for long-term wealth preservation or sustained growth in their long-term wealth. We are particularly concerned for the inflation because that does have the other impact on the other side of our clients' balance sheet in their future obligations. So inflation is something that we watch quite closely from a portfolio construction perspective. And what has been quite interesting is that over the last 12 to 18 months to 2 years, we have actually been seeing that the break even on inflation bonds, tips, for example, that I had been quoting earlier, have been at a level that we think are quite reasonable, and therefore we have been preparing and putting more inflation-linked bond into our portfolios. Essentially, we see that as buying fairly cheap inflation for protecting against that inflation risk.
Angelina Lai, we appreciate your insights this afternoon, CIO for Asia and the Middle East at St. James's Place. Thanks so much. Now, JP Morgan CEO Jamie Dimon warned about the risk of making a sophisticated AI system like Anthropic's Mythos model more widely available, comparing it to a ballistic missile. Rapid advancements in AI have both businesses and government assessing potential threats. The issue took on more urgency after Anthropic said its Mythos model is so good at finding software vulnerabilities that it cannot be released to the general public.
Mythos, that's a real issue, which I know our government is on top of at this point. It's not to stop small banks from gaining stuff. It's really just to make sure we roll out the stuff that we know is being controlled, because you're giving ballistic missiles to individuals with Mythos, basically.
And we've been told that Anthropic is seeking to meet with investors ahead of its potential mega IPO. Sources say banks leading the offering are scheduling meetings between investors and the company in the coming weeks. Bloomberg earlier reported that Anthropic is considering an IPO as soon as October, putting it ahead of rival OpenAI's potential listing in 2027. All right, coming up, Dangote refinery backtracks on a crude pricing deal with the Nigerian government. We'll have the details on that next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. The Dangote refinery is halting fuel sales in Nigeria's local currency and switching back to U.S. dollar pricing. The company blames failings in a 2024 government agreement because the refinery isn't receiving enough Naira-priced crude oil. For more, we're now joined by Anthony Osei-Brown, our Nigeria bureau chief. Anthony, thanks so much for being with us. So let's just start here. Why was this decision made by Dangote to price petroleum in dollars instead of Naira?
Yeah, you've already mentioned one of the main reason is that the Dangote refinery says it's not getting enough crude based on the 2024 agreement in which the NNPC was supposed to supply it crude in Naira. In Naira, then it will sell crude locally in Naira also. It says he's not getting enough of the Naira crude, so he can't continue selling in Naira because that means it's not getting enough dollars to buy crude in the international markets where he needs it. So that's why he's switching to dollar sale of petroleum products in dollars in the local domestic market.
How does this impact the Naira, Anthony? Because surely the market was very much anticipating the refinery and the IPO that's coming later this year. What's the likely impact then on the Naira and prices of petroleum products then?
Yeah, this is likely to put significant pressure on the local currency in the local market. We're likely to see significant, the Naira coming under pressure because Dangote supplies an average of 80% of the products in the markets currently consumed by Nigerians, and that's over 45 million liters a day. So Dangote supplies anywhere between 40 to 43 million liters a day. And if all that is supposed to be priced in Naira, that would, in dollars, that would put a lot of pressure on the dollars because local distributors will now have to go and source dollars either from the central bank or from the foreign exchange market to be able to buy products from Dangote refinery. And that will likely put pressure on the currency. And we've seen the currency as become highly stable in the last 2 years since the refinery came on board. So if Dangote's plan goes ahead, which has already gone ahead, taken effect from July 13, they were likely to start seeing some significant pressure on the Naira, on the dollar, on the Naira in the local market. Yeah.
And Anthony, maybe really quickly, what can the government do about this?
The government will just have to look for more crude for Dangote to use. Dangote currently needs an average of 30 million barrels of crude monthly. It's a 700,000 barrels per day refinery. He claims he's getting less than half of that from the local market as Naira crude. So the government has to look for a way to get more crude to Dangote so that he can refine it locally and then be able to sell in Naira.
Right. All right. Anthony Osei Brown, thanks so much. Bloomberg's Nigeria Bureau Chief joining us there in Lagos. Coming up, investors eagerly anticipate TSMC's earnings amid growing scrutiny over rapid AI spending. We'll look at what to expect next. This is Bloomberg. This is Horizons Middle East and Africa. Our top stories this morning. Strikes intensify. The U.S. launches fresh attacks on Iran as tensions mount in the Strait of Hormuz. Trump vows to continue until Tehran stops targeting commercial shipping. Chip rout, Asian equities slide as semiconductor stocks extend their sell-off. Attention now turns to TSMC earnings for the next AI demand signal. And we hear from Dubai property tycoon Mohamed Alabbar on his $20 billion plan to help rebuild Syria. It's just gone past 8:30 a.m. across the Emirates, 6:30 a.m. in South Africa. I'm Jennifer Zabasaja in Johannesburg, and we are awaiting that much anticipated TSMC earnings that are coming in just a bit. But let's just get you a look at the market picture as it stands right now. As we can see, U.S. equity futures marginally pointed higher following what was a modestly positive session on Wall Street on Wednesday. We did see the S&P closing in the green for a second straight day. But as we mentioned there in the intro, chip stocks are still under pressure. We're seeing that play out a bit in Asia. We'll have Winnie Xu walk us through that in just a minute. But still, Wednesday, a lot of the sentiment had been focused on around the PPI print, the softer than anticipated PPI print that we received. Also, that leading to traders dialing back on some of their bets for Federal Reserve rate hikes. As you can see there, the U.S. 10-year yield up just about barely a basis point there, but 4.5554 as we can see the U.S. 10-year yield trading. Brent crude is also on the board. It's been wavering between gains and losses, of course. We've been following the geopolitical situation in the Middle East. Brent, though, down just over 0.2% there, breaking what we saw was a 3-day streak as we saw some of the intensity in the Middle East escalate earlier in the week, but still Brent trading just below $85 a barrel there. Perhaps some of the demand side concerns filtering into the price action there. Let's check in, though, on how markets in Asia are faring. Winnie Xu is standing by in Hong Kong for us. Winnie, what are you watching?
Morning, Jen. So we are seeing Asian stocks under a bit of pressure today with the MSCI Asia down more than 1%. Losses are mainly being led by technology shares as well as South Korea's market. Now we have KOSPI here down almost 7%, but all eyes are really on that upcoming announcement later in the afternoon around the measures on the leveraged ETFs. So that can have major implications for the likes of SK Hynix and Samsung Electronics. Now, when it comes to the Taiwanese market, we are seeing fluctuating when it comes to the overall benchmark, but TSMC today actually bucking that overall weakness in the chip space, and we are seeing stocks doing slightly better ahead of its earnings. In fact, we are hearing that expectation is actually quite bullish. We're looking at buy-side expectation of CAPEX, of growth margin at about 70%. So that is quite high expectation. So we'll see if those earnings are able to meet that sky-high expectation. Now, when it comes to the bright spot of Asia today, we are seeing HS Tech here up more than 3%, with gains being led by the likes of Alibaba and Tencent. Now, the good news that we have heard is that Apple has finally got that approval from China for its AI features. So this AI intelligence that it is working on with these Chinese internet companies. So those are providing a bit more tailwind as investors continue to rotate away from South Korean market. Back to you, Jen.
Winnie Xu in Hong Kong. Winnie, thanks as always for walking us through the markets there. Let's just stick with Asia. Asia's most valuable company, chipmaker TSMC, is set to report second quarter earnings later today. The highly anticipated report will be a crucial test of whether AI spending can keep powering the recent record highs in the chip sector. Let's get more from Bloomberg Chief North Asia correspondent Stephen Engel, who joins us now from Taipei. Stephen, you've been watching this closely, as many investors are as well. What should we be looking out for from these TSMC earnings in just a bit?
Yeah, I mean, the eyes of the world are looking at TSMC, as they were as well with ASML, the big European, of course, chip equipment maker, the EUV, the extreme ultraviolet lithography equipment. They came out with fairly strong guidance going forward. Actually, they raised their net sales forecast for the year for a second time this year. They also talked about adding potential capacity next year of 30% increase up to 85 machines, and then even alluded to the fact that they could possibly boost that capacity by another 30% in 2028. That's all based on end demand, or at least signals of demand from its customers. So we're talking about 110 machines, and that is something the CFO of ASML said they have to really look closely on whether that is justified, and so far the indications are it is justified given the demand. But again, the stock did not do well. There was tepid response to that, and that's why we're looking at now, a few hours later, TSMC, because chip sentiment right now is a little bit shaky because of the valuations, and whether this is actually, this report from TSMC, the world's biggest chip foundry, can actually put a floor on some of that negative sentiment and actually maybe act as a springboard. So TSMC, we're watching that again closely. We already have the June monthly numbers of sales. They were up 68% after the second quarter was about a 36% rise in sales. So we're going to get the confirmation of that, and it's just really about the guidance going forward that the market is hanging on, the words that's going to be held in the ballroom here at the Mandarin Oriental here in Taipei behind me.
Stephen, just given what we did see from ASML and the outlook from that company, what is the expectation for TSMC and the very crucial CapEx that we are watching for?
Yeah, I mean, we're looking for that CapEx number of 58 billion is what they've already stated, TSMC. That's they've set aside for capital expenditures. UBS, for one, is saying it could be upwards of 60 plus billion. But you have to also look at some of the margin pressures that TSMC might be facing. Sure, they have pricing power as well, given the overwhelming demand for the chips, including the latest from Nvidia with the Birol Rubin architecture. TSMC makes about 6 chips for that on the CPU and GPU side. So there's lots of demand that gives them margin. It's great for the margins, but at the same time, you have to look as well as the rollout of production, the 2 nanometer technology. There's going to be pricing pressure there. Also, their rollout towards production in Arizona, the build out in the United States. And again, on the other side, there is weakening demand, continued weakening demand for Android handsets, smartphones, as well as PCs.
Bloomberg, Stephen Engel in Taipei. Plenty for you there on the ground to watch for. Thank you so much for your reporting. And there is more to come in our coverage of TSMC. Stephen will be speaking to the CFO, Wendell Huang. You can catch that interview on Monday. Now, while markets await TSMC earnings, South Korea's chip-heavy KOSPI index sharply lower today. This as investors mull a report in the information that semiconductor linchpin ASML plans to raise its prices. I'm now joined by Jean-Paul van Oudheusden, market analyst at eToro. Jean-Paul, thank you so much for being with us. So we just had Stephen walking us through some of the expectations for TSMC. How are you reading into the current AI demand picture right now, especially off the back of what we heard from ASML?
Yes, good morning, Jen. Thanks for having me on the show. I echo the words that Stephen used before. The commentary of the ASML CEO yesterday was very bullish. Perhaps even more bullish than we're used to from the past. I think a year ago, he was talking about, well, we don't know whether we will see growth in 2026. Now it turns out that ASML is on a track to reach something like 15% revenue growth, not only this year, but also for the years to come. The market, I think, is looking into CapEx. That is the big word, CapEx from the big tech companies that will report later on next week. Alphabet will be the first one. But indeed, TSMC is now first. And it's exactly the guidance on the CapEx number that the market is looking for. They have already indicated, like Stephen stated, 58 billion. The market consensus probably is something slightly north of 60, but the whispering numbers are even higher than that. So a lot depends on what TSMC will come out with in the meeting after the earnings release.
Is your expectation then for any negative or downsides in the release that we'll get, Jean-Paul?
It's not so much the negative in the numbers, because ASML was so bullish. They don't do that for nothing. For the coming years, this industry will grow. There is an accelerated need for the most advanced chips, 3 nanometer, even 2 nanometer. ASML cited that some customers are already stepping up to look in 1.4 nanometers. That train will continue to ride. But it's now the pace in which we will get there. We will get there earlier than perhaps 2030 that the market was thinking of before, and that is where TSMC's guidance come in as crucial.
So then what is the picture then, Jean-Paul, if we think about some of the demands and what these companies specifically manufacture in terms of machines? Is there any concern around potentially ASML or TSMC driving themselves into a bottleneck? How much do you read into that?
Yes, correctly. That is definitely a thing that is on the table. I think the starting point here is that driven by the US, governments are predetermined. They want to win in the AI race. And particularly the US companies, they feel they are ahead of the field. So they want to invest more rapidly to make sure they become very dominant, not only next year, but for the years to come. And from that point of view, they can also export the AI technology to more countries, like we've seen in different other sectors with products that they have developed more rapidly. Now, ASML is very crucial to that. There have been thoughts that ASML might become a bottleneck because they produce these huge EUV machines that you cannot rapidly scale up. So in that sense, the earnings report yesterday was very bullish. The numbers that Stephen already gave from 65 machines to 85 next year, and perhaps 110 low NA EUV machines in 2028. That is really stepping up. Yeah, and we need to see whether that is enough or that will still, even though it's 70% higher than this year's number, whether it still will be a bottleneck because companies want to move faster. And that's where we get back to the CAPEX numbers that we will hear today and next week.
Yeah, and just a few, actually. So we appreciate your insights and analysis coming in ahead of those earnings. Jean-Paul van Oudheusden, market analyst at eToro, they're joining us. Thanks so much, Jean-Paul. Now, coming up, as the U.S. repeals sanctions, a Dubai property tycoon is planning a $20 billion development in Syria. We'll have that interview next. This is Bloomberg. Dubai property tycoon Mohamed Alabbar is planning a massive $20 billion redevelopment project across Damascus and Latakia. Spurred by the lifting of U.S. sanctions, the Emaar founder told Bloomberg he plans to build tens of thousands of homes, capitalizing on a fresh wave of post-war Gulf investment.
We probably will top $20 billion between Damascus and Latakia. A lot of work have been done. I am optimistic that within about a month we should really be signing our deal together with the government. Again, we build large development, so we do 100 million square feet site or 10 million square meter sites, and we do everything: the roads, the hospitals, the schools, the parks, the hotels, you name it, the residences, and so the mixed-use development. Now, what's interesting in Syria is that there was no real development in Syria for the past 55, 60 years. And the doors are opening. Now, also one of the most vibrant economies in the Arab world is Syria, because Syria is really the industrial base of the Arab world. It is the tourism base of the Arab world. It's the oldest story in the world. And we as Arabs, we're also looking for opportunity to invest in the Arab world. Yeah. And our experience from investing in the Arab world is looking good, but Syria is the most exciting place for me.
Well, definitely there is a lot of need for investment in Syria, especially with the need to reconstruct after the war. Correct. You mentioned that there will be a structure that's unique in Syria, that's going to allow Syrians to be able to take part in the redevelopment and the reconstruction of their country. Sure. Can you tell me, how do you plan to do that, and what are your talks with the Syrian government are centered around?
Well, first of all, I think the Syrians, they know this better than me. They have not been able to own their country for the past 55, 60 years. So I think large development by a foreign player, I think we should be courteous to invite the people of Syria, either they are in Syria or outside Syria, to come and jointly put money with us and invest with us, and we'll put the dollars as well. So I want them to participate in the economic growth and the profitability in these projects. And I'm quite keen to bring in the small investors, to be honest with you. We'll bring in some big investors. That's number one. Number two, I think we want them to feel that they are really part of this progress, part of the movement forward in their country. I think you asked me earlier also, is that, what are we doing? Of course, there'll be economic impact. Tax payment, job creation, all that stuff, infrastructure building. But also we spoke earlier, you and I, and you had a good question about, what are we doing for the people of Syria, especially when it comes to, low-income housing. And we have two programs. We either going to do low-income housing as part of our development, because I think it's good to mix that, or we might have a special contribution for every unit we sell. We probably have to contribute to some type of an organization, like a housing organization, that contribute to repairing homes that have been damaged by the war. Looking at our numbers, I think the margins are handsome enough that we can do a lot.
I mean, a lot of investors are still wary about Syria, considering the political situation in the region and the fact that we just had a war with Iran and the situation in Lebanon remained kind of fluid. Can you tell me a little bit, how do you assess for this risk? How do you manage that risk? And do you worry about possibility of a war, kind of derailing things for you in Syria?
Well, you know, Zaina, you know me very well. I live in the Middle East. I've gone through all these. I've seen wars, many of them, one just recently, right? But at the same time, you know, we know how to assess risk. We know how to handle risk after being in the Middle East for so long. But at the same time, you've got a country that's trying to stand up on its feet. You've got leadership that's working day and night. I think we as businessmen, I know we are driven by IRR and we have to give money to our shareholders, but at the same time, we need to be responsible that we go and support at the time when our governments in the Arab world, they are trying to uplift society. So we should take a little bit of risk. We know how to handle risk and we should go and support. I think it's a duty beyond just the business.
And that was Emaar Properties Managing Director and Founder Mohamed Ali Rashed Alabbar. He was speaking, as you could see there, with our Middle East finance reporter Zainab Fatah, who is joining me now in studio there in Dubai. Zainab, thanks so much for being with us. So we just heard there Alabbar saying he knows how to handle Middle East risk. He's assessing it. How are we seeing similar investments playing out with other Gulf investors? Are they really ready to put aside some of the geopolitical risk there?
A turnaround in Syria is definitely something that everyone in the Gulf region really wants to see happen. They remember Syria as the place that they, used to spend a lot of their summers in, a very thriving economy at one point with a big industrial base, a strong labor force, and a country with a long history. Damascus is one of the oldest inhabited cities in the world continuously for thousands of years. So there is a lot of history that makes these countries want to see a revival in Syria. So between Saudi Arabia, the UAE, Qatar, and many other countries in the region, they are trying to give the new government in Syria the tools to be able to help to turn around the economy, which is the biggest challenge there. But also, they want to see Syria moved out of the Iranian sphere of influence and become more an Arab partner for them going forward.
So, Zainab, surely then the investment is welcome, especially as we see the U.S. repealing sanctions. Was that reflected in your discussion?
Yes, the push to repeal the sanctions have been actually championed by the Crown Prince Mohammed bin Salman, who brought Mr. Ashara, the president of Syria, to meet for the first time with President Trump. And since then, we have seen the repeal of sanctions. Even a week ago, we have seen Marco Rubio say that the U.S. is planning to remove Syria out of the list of sponsors, state sponsors of terror. We've seen Qatar and other investors put out money towards building roads and rebuilding the airports. The UAE's largest port operator, DP World, have announced an investment of $800 million to upgrade the handling capacity in Tartus port. We've seen similar work and similar amounts of money being actually dedicated to Syria to try and help the new government there shore up the economy and rebuild a lot of the destroyed infrastructure after nearly 12, 13 years of war in that country.
Really fascinating interview there. Zainab Fatah joining us in Dubai. Zainab, thanks so much for bringing us that interview. And coming up, incoming UK Prime Minister reportedly makes his pick for the next Chancellor. That and more next. This is Bloomberg. In Nvidia founder Jensen Huang says his company's next-generation AI accelerator systems are in production and on track for delivery to customers. He was responding to reports that manufacturing snags may delay its rollout. He spoke during a visit to Japan to talk about how Nvidia might aid the country's sovereign and physical AI ambitions.
Not true.
Are you still on track? Can you confirm
we're on
that?
track. Completely on track. Not true.
Okay, so Taiwan has chips supply chain.
Yeah, Vera Rubin's already in production.
Okay.
Yeah, giant amounts of production coming.
The Financial Times and newspaper report that incoming UK Prime Minister Andy Burnham will pick Home Secretary Shabana Mahmood as the country's next chancellor. The potential appointment has raised alarms for some of the Labour Party's soft-left members who had expected Energy Secretary Ed Miliband to be given the role. Burnham's team have pushed back, saying that a decision has not yet been made. And finally, defending champion Argentina have secured their spot in the FIFA World Cup final after beating England 2-1, trailing 1-0 to England into the 85th minute of the game. Argentina recovered with 2 late goals in a dramatic comeback. Argentina will now face Spain in Sunday's much-anticipated final. Well, that is it for Horizon's Middle East and Africa on this Thursday. Stick with us for Daybreak Europe. That is next. This is Bloomberg.